For the market, there's some incremental pressure that seems to be creeping through now. So about 200 points now gone on the Sensex, and the mid-cap index continues to lag behind. But the stock on our radar now is Sonata Software. They've announced a good set of earnings. Revenue growth was primarily driven by the IT services business. Prasanna Oak, the CFO of Sonata Software, now joins in. Mr. Oak, good afternoon. Congratulations on a good quarter. First, I want to start by talking about your domestic business here. You've seen revenues of about 560 odd crores. Is this run rate sustainable for you? Mr. O, can you hear me, sir?
Yes, I can hear you, Sumera. Thank you so much for having me on the call. Our IT services business as also domestic business both did well. We had a little bit of catch-up on the domestic business. It had actually gone down in the last quarter because it was a deal which actually tipped over. But I think where we are is we should be seeing about close to 450 crores going on per quarter. But both our businesses seem to have grown, Sumera. 5% constant currency on the international services and 18% year on year. So, yeah, we are happy and pleased with our numbers.
Okay. Mr. Oak, hi. Could you put the seasonality in context for us? Is Q3 generally a very strong quarter for you? Because 843 versus under 600 crores, right?
Right. So,
yeah.
So, Prashant, just to give a little bit of color on this, see, our business is into two parts. One is the domestic products and services, right, which is more the domestic India business. And as with the last year, we did manage to grow in this quarter. There's a seasonality, a little bit of catch-up entries that we have seen in this line of business. The other business is our classical IT services and solutions business, which is more international. And so we have to look, from a lens of these two separate lines of business. And I think both have grown, is the point what I would like to stress, Prashant.
Okay. Just focusing a bit more on the domestic business, why is there pressure on margins this quarter?
Our domestic business largely comes with significant large deals, which could be sometimes having a lower margin, Sumera. And so therefore we don't even look at a domestic business on just the revenues, but more on the margins. Margins are more or less similar as with the trend. The margins on a domestic business are much, much lower than what they are on the international business because there's a lot of reselling of the software which happens in the domestic business.
Okay. What about IT services then? What's the outlook there for the rest of FY19? What about FY20? And also any more acquisitions that you're considering?
Yeah, absolutely. I mean, see, we grew by a constant currency of close to about 5% on a sequential basis on our international IT services and about 18% year on year. And we also completed, or rather, announced two acquisitions in the month of December. What is happening is that, the digital transformation, through our proprietary platformation technology is actually helping us have far more conversations. We got about 9 new customers this time. What we are expecting to do is also continue to invest in some of our technologies, including our own IPs, and then, RPA, AI, machine learning, platformation engineering for the cloud. So we expect that as we continue to do this and we continue to execute, we should be, hoping for similar growth. Of course, that's our expectation. That's what we would be striving towards.
The contribution of IP in IT services revenues has gone up from 15% in the same quarter last year to 19% plus. Could you talk a little bit about this, and what do you foresee going forward?
Absolutely, Prashant. So, see, we have got a stable of about 6 IPs of our own. And in fact, with one of the acquisitions that we had to the Scalable in Australia, we've got a IP which is into commodity trading supply chain. So whenever we are selling IPs, we build our services around it. And so now with a stable of about 7 odd IPs, we are continuing to see a value differentiation that we are offering to our clients. and which is therefore helping us to grow faster. If you really look at it, we had about a 13% growth about 4 quarters back. Our IP-led revenues were 13%. Now they're about 19% in the last, 8 quarters. So roughly we are growing at about 25-30% on IP-led services, which is faster than our regular growth of about 15 to 18. So we believe that this is actually helping us provide far more value to our customers, helping them in their transformation journey. And we expect the trend to carry on, and that's what we're hoping for.
Okay, we leave it there, Mr. Oak. Thanks very much. Appreciate you joining in. Good luck, and thanks again for being with us here on the channel. So 66 lower on the Nifty, 10,877 is where the Nifty is at. And once again, there is a bit of a downdrift, which is clearly visible. The broader market has been down and out, and I think the Nifty is also following on that same track. We're not at the day's low, I don't think, not yet. So let me just tell you where we are. The low today was, on the Nifty that is, the low was 10,857. So we're still about 20 points away. But I mean, it's, the market's slipped a little bit since we started at 130. Some opinion now. We spoke with Madhur Dhar of GTI Capital Group earlier in the day. Here are his thoughts on markets and sectors he likes. He believes that the downside seen in the auto sector is just going to last for a quarter or two. He believes it's a blip. And of course, his views on elections. Listen in.
I think it's probably a 1 or 2 quarter blip. I think the odds are the growth is going to accelerate a little bit. And, if we get interest rate, the structural interest rates down, not just the signal repo cut by the RBI, and some of the liquidity issues that are now front and center, and we go through that, I think interest-sensitive sectors of the market should hold up. So I think it may be a little too late to start worrying and panicking about housing stocks or auto stocks for that matter. Elections have always been overestimated in India in terms of what they may do to the markets. And clearly, uncertainty is worse than bad news. So I think in the next few months, you'll have some uncertainty, and the markets may not break out one way or the other. So I'm not concerned about elections. I am concerned about the fact, as I said, there is a tug-of-war between decelerating growth around the world and hopefully accelerating liquidity.
All right, on that note, we'll wrap up then on Mid-Cap Radar, but do stay tuned. We'll take the market action forward with your stocks.